You're listening to Indications by the Conference Board.
Welcome to the Conference Board's Indications podcast. Indications is a public podcast featuring our global roster of thought leaders. Topics range from economic growth and competitiveness to human capital, governance, sustainability, and beyond. Each episode is a serious conversation grounded in data and insights that will keep you ahead of the curve in a turbulent world. I'm here with my colleague Lynn Franco, Senior Director of Economic Indicators and Surveys at the Conference Board. Welcome, Lynn. It's always great to speak with you.
Great to be back, Dana.
Well, Lynn, let's discuss the most recent consumer confidence survey. So consumer confidence dipped in January after 3 months of improvement. What were the key drivers of the January decline?
Well, what we saw is that expectations softened a bit in January. So they fell from 95.4 to 90.8. So consumers were slightly less positive about the business outlook. The same held true for their employment and income outlooks. However, on the flip side of that, we did see an improvement in the present situation index. So that's some relatively good news.
Well, the survey was taken in the thick of the Omicron variant. What did consumers have to say about the variant and how it affected their lives?
Well, we did see a little bit of a spike in the number of mentions about the variant, so consumers were slightly more concerned. But I think if you take that into sort of context here and you take a look at where we've been over the last several months, given all that consumers have faced, whether it's a surge in a new variant, whether it's been, increasing prices, or supply chain disruptions, consumer confidence has held up relatively well.
Well, that's great to hear. You did mention that the present situation ticked up slightly, but there was a dip in expectations. Can you please tell us more about these movements?
Sure. In terms of the present situation, we see that a larger percentage of consumers rated business conditions as good than last month. A little bit of easing in terms of employment. Those who said jobs were plentiful dipped a little bit, but those who said jobs are hard to get actually decreased. And both of these measures are really at very strong, favorable readings, right? So that really tells us that at least, we ended the year on a good note, and at least the first month of the first quarter, we're on pretty solid economic footing.
So while consumers are a bit spooked by Omicron, they still anticipate economic expansion this year.
Absolutely. Despite the slight dip that we see in consumers' expectations, it's still a little bit higher than where we were in November, October, and September. And the level of 90.8 is well above sort of the 80 mark, which is territory which, if we go below that 80-point mark, where we become somewhat concerned. So we're still expecting more growth, maybe not as robust as we have seen in recent months, but those were also unsustainable levels. So this really shouldn't come as much of a shock.
Makes sense. I also saw that buying plans still looked pretty hardy. Tell us more about that. Is this consistent with our outlook for the US economy?
Absolutely. I mean, despite some softening in consumer spending, we do expect it to remain relatively strong. And what we're seeing here is a bit of an uptick in the number of consumers who said they intend to purchase an auto. We saw a rather large uptick in home purchasing intentions. And I think actually this correlates well with some of the news that we saw this morning about home prices, where we did see a little bit of a softening there, but a lot of the factors that created a strong demand for housing are likely to persist through 2022. And given that consumers are intending to purchase more homes, they're obviously going to purchase more of these big ticket items to go in the home. So we've seen an uptick in major appliances as well.
Well, another notable print was the 1-year inflation expectations gauge. Even though consumer price inflation measures are near 40-year highs, inflation expectations fell once again. How do we reconcile these two sets of data?
Yes, we've actually seen now back-to-back month dips. A reading where we are right now in January, still somewhat elevated by historical standards. But I think, at least I know, I've seen over the last couple of weeks a little bit of a decline in gas prices. So I always take that as a sign of welcome news. And, some of the pressures that we see probably will subside throughout the year. So hopefully, we've sort of peaked in terms of inflation expectations.
Well, that's welcome news. Were there any regional or income-based differences in consumer confidence?
Yes, we've seen some regional and state differences. I think, states where we saw sort of a big surge in the virus. For instance, New York, we saw the index decline from 116.6 in December to 107.6. But we know that at least down here in the city, we've likely peaked and are on the downside. So hopefully, we'll see a little bit of stabilization in consumer confidence. The same thing for Florida and Pennsylvania and some of the big states where we've seen declines, but still relatively strong. I mean, if we take a look at sort of the 3 month average this year versus last year, there's been an improvement pretty much across the board.
So, what do you think will be important drivers to keep consumers optimistic going forward?
The first key is always going to be employment. So, if we continue to have sort of this tight labor market that's pushing up wages, while that's not good for employers, it's good for employees. So, I think that will help maintain a confidence. We'll have to keep a careful eye on what happens in terms of inflation. Just as I said before, hopefully the worst is behind us and we begin to see a little bit easing there. And then probably the next thing on the horizon is interest rates. Those are expected to increase several times this year. That may cause a little bit of a cooling in a very hot housing market and may pose some challenges for some of the bigger ticket item purchases that are much more interest rate sensitive.
Well, Lynn, thank you as always for such great insights. This has been Indications from the Conference Board. If you enjoyed this podcast, you may listen to additional The Conference Board offerings by going to www.conference-board.org/podcast or find us wherever you listen to podcasts. Thanks again for listening.
This has been Indications from the Conference Board.